Wait for it. Wait for it. Hey, everybody, Economic Ninja here. I hope you're doing great. Hope you're having a great morning. If you don't have your coffee, go ahead and grab a cup of coffee. I tell you to pause it, but this is live. Just don't do anything. We're going to talk about gold price. JPMorgan just came out with an important informational message about the price of gold, where they see it heading. But before we get into that, we're going to talk about why I like gold, why I like silver. CNBC has an article right now. And just for historical purposes, as of the recording of this video, the price of gold is at $1,956. It's up $10, right? Got totally smashed down yesterday. And silver is sitting up only 7 cents at 24.44, okay? The story out of CNBC reads, gold heads for weekly loss on strong U.S. economic data. So gold and silver got smashed down, right? A lot? No, not a lot. Silver was $25 an ounce, so it's down pretty good. I can't do the math really quick. My mind's going blank when I go live. So gold's down like $50, let's say. And that's why, because interest rates went up, right? So a bunch of traders go, ooh, we want dollars that have depreciated 12% in a year. And we don't want gold that is still holding its value for the year. Just absolutely blows me away, right? But these are the small little trends. JPMorgan came out with an alarming bit of news where they see the gold price heading over the next year. And that's why we're going to do this story. But I just want to show you this. And this is the CNBC, the mainstream, right? Gold regained some ground on Friday as the dollar retreated, but still headed for its worst week in five weeks. After data pointing to a resilient U.S. economy soured bets for a dovish tilt in U.S. monetary policy. Guys, type 1 if you think the economy is doing well right now and it's rebounding. Type 2 if you think, no, we're headed for something much worse. The reason why I ask that is because this exact same thing happened during the dead cat bounce of 2007. We started to see information, it was like the end of 2007, early 2008, where things were looking up. Things were looking up. This is good. And where I want you to understand that there's nothing new under the sun. These same cycles play out all the time. And really what this part of the cycle is in economics terms is the eternal optimism of the human being. Honestly, 99% of human beings are eternal optimists. Even though we seem bummed and down, we are people that are optimistic. That's what keeps us alive. That's what keeps us going. The thought of it could change tomorrow. That keeps us going. Now, the 1% succumb to the misunderstanding or knowledge or desire to understand what is going to come tomorrow, right? And we've talked about that on this channel before. And that always leads to tragedy. But by and large, most people are optimistic. And that's what you see playing out in markets right now. Now, going to gold or going to JPMorgan, I want you to understand that when a company like JPMorgan comes out and says something, they're 99% of the time going to be right, barring something catastrophic in the markets that they don't see. And the reason why is because they have more access to information than anyone in the nation. They are the largest bank in the country. They are buddy-buddy with the Fed. As a matter of fact, I would say ownership in the Fed. And they have the ability to see the future. They see the trends. Like I've been teaching trends. They are a lot smarter than the ninja. Why? Because they've got 1,000 ninjas sitting there reading the cycles, okay? And behind the scenes, they're doing things that they're not telling you, like buying gold, all right? We know that JPMorgan owns a lot of silver. And to answer this question right off the bat, I like silver more than gold for so many different reasons. And while I'm saying that, I'm going to be talking about a lot of that. There's spiritual reasons, there's physical reasons, there's just logical reasons. I'll be talking about that at the Silver Symposium, September 30th. I put a link down below. There's about 100 tickets left until the room is completely at capacity at Caesar's Palace. I think that you are going to become very encouraged going to that event. I picked Vegas and talked to my buddy that runs the Silver Symposium and convinced him to go to Vegas because it's so much easier to fly there, unlike Coeur d'Alene, Idaho. And it's just easy in, easy out. So 100 tickets left. If you guys want to take a look at it, I think the discount link makes it like $90 or $99, and you also get an ounce of silver. We're putting silver in people's hands. My buddy Rob is really passionate about that. So go and take a look at that. 100 seats left. All right. So, and here's another thing. Today, most people aren't going to go buy gold and silver because it's down. I talk to my broker about this all the time. And I always tend to do videos when the precious metals are beat down. I don't like to do videos when they're up, unless it's like just a quick shout out. Hey, look, silver's crushing it today. It's up 3 or 4%. And And ironically, those are the days that she gets hammered with calls to buy silver. And it blows my mind and hers as well, because I told her about this a year ago. This is the emotional state of the consumer, that they FOMO in, they freak out because they're afraid of missing that next 1 or 2%. And I like to do videos, because I'm an investor, when weeks like this happen where gold and silver getting smashed down for no reason. I mean, I know why traders do it and why algos trade it, because they're trading into dollars because they're excited because the Fed just baited them with a little bit more interest. But the algo's not paying attention to the BRICS nations. They're not paying attention to macroeconomic fundamentals that are going to affect gold. And that's what JPMorgan is going to talk about here in the near future, 1 year out. And so nobody does that. So I called her yesterday and I said, hey, I'm going to do a silver video, gold and silver video, because they got so smashed down over the last week and we're headed into a bad week. And so I said, give me a deal. And she says $3.25 over spot for 1 ounce silver buffaloes. I put her phone number in the top line of the description. So if you want to call her, those are for orders over $1,500. If not, if they're smaller orders, I'll put a link to a company that I've used and I trust them to have physical silver delivered to your house. Okay. But she says $3.25 over spot for 1 ounce silver buffaloes, $1,500 orders or more. I like that deal. And so I'm putting that out there for you guys. All right. So we already know what CNBC's talking about, right? The facts. Gold's headed for a big weekly loss, the biggest weekly loss in 5 weeks, all right? Because of strong economic data, which I do not buy into, all right? Michelle, thank you so much for the super chat. All right. Here we go. So let's dive into the story from JPMorgan, because I think this is very important. JPMorgan Chase sees gold prices at record highs in between 12 and 18 months. Now, I've talked about an event that happens when stocks crash. The paper price of precious metals, gold and silver, even platinum and palladium, come down. All right, this exact same thing happened the 2 months prior to the crash of Lehman Brothers, right? And the reason why is because large institutional investors, hedge funds, and even retail investors that have used paper gold as a hedge against uncertainty, and this is the ironic part, they have it as a hedge, right? So they have some paper gold shares like GLD or SLV, which is all fake. There's nothing there. I swear. I mean, I could do stories over and over about this. There's nothing there. It's vaporware. What happens is, as their stocks are tanking or they're having a liquidity crisis and they're having margin calls, they sell that and then take care of their debts, right? The problem is everyone's selling their paper at the same price, so the price of paper goes down, which forces down the spot price. Well, then all of the investors like me race, and we're talking race because you literally got about 24 hours. Thank you, Ripple, so much for the super chat. You run down and you buy physical precious metals, whether it be online or your gold and silver shop, right? Your coin shops downtown. And what happens is they all sell out within 24 hours, and then they immediately all rush to their dealers to bring in a bigger allocation, and the price over spot skyrockets. It literally happens within a day or two now. Information's moving so much faster, it's crazy. So it's almost like after a couple of days, you go, crap, I tried to buy cheap gold and silver, and I couldn't even take advantage of it because the spot price skyrocketed and shipping delays freaked out. And try and explain shipping delays to the average person. You know, you could tell them, oh yeah, you ordered a big screen TV off of Amazon or Walmart. It won't be around for 3 weeks because it's in back order. And you're like, no problem. Try and take that same amount of money and go buy gold with it and tell them they're back ordered and it'll get to them in 3 weeks. And they freak out. I'm not joking. It is the wildest thing. And so since I'm an investor in gold and silver, and I invest based off of fundamentals, the understanding and knowledge that the country, our Federal Reserve, and our government are in cahoots to destroy our currency. And not only that, they just wanted to do it for their own gain. But unlike any other time in history, in recent history at least, other countries are conspiring to destroy our dollar as well. So now you've got the Fed and the government going, oh, we're going to destroy it and buy up all these assets super cheap. You got all these countries going, we're going to destroy the US, and we're going to do it by destroying their currency. And so what I do is I go, all right, and there's only so much of it around, so very low supply. The mining companies are in the dumps right now because of and I keep slowly nipping at mining companies. But guys, remember I made that announcement, 4 or 5 months ago, that I sold 1/3 of my entire portfolio and moved it to cash. And I even had, a billionaire call me up and say how crazy I was. And I said, all right, well, stand by. Let's see who's right. And that billionaire doesn't want to talk to me anymore. because I was 100% right. As a matter of fact, those positions moved back down to what I originally paid for them. And yeah, sure, I wish I would have moved 50% of my entire portfolio, but point being is I am starting to pick up little by little on weakness these shares that I originally paid for, and I am almost going to double my, if it dips a little bit more, I'll entirely double my entire portfolio in mining stocks, right? These are solid companies, but they're getting beat down because the sector's beat down because of what I'm talking about right now. But now JPMorgan says that they're seeing record gold prices between 12 and 18 months. Well, before that, you're going to see weaker prices because what's going to happen is the economy collapses. The Federal Reserve's doing everything they can to keep it afloat. So they're doing things to prop up the dollar, and it pushes gold and silver down. So what I do is I talk about gold and silver when it's coming down in price, because hopefully I'm finding investors, people that are going, yeah, I've been buying gold and silver for years. And yes, I buy on weakness. I back the truck up. That's on weakness. That's what a good, solid investor does, because I see the future, right? And I don't put all of my money into one basket, because that's the dumbest thing anyone could do. And you know what, guys? I got to be honest with you. I learned that the hard way. I lost everything that I put in the stock market twice in my life, because I saved up 60 grand once, and then I saved up 150,000 bucks once. I put it all in the stock market, pretty much all into one stock, and it tanked. And then out of fear, I sold it. There's only been 2 stocks in my entire life that I've bought and sold that did not recover. Horrible. I had to learn those lessons the hard way. It wasn't until cryptocurrency that I got a real crash course in FOMO, and I learned how to control my emotions. But with precious metals, I'm looking at actual physical coins, right? Either vaulted in a vault like I do, or put it in a safe, right? And I used to do that. I just don't do that anymore. My lifestyle is not the one that can do that, is not conducive to that, okay? Burying it under a tree or something like that. So I vault it in vaults that have been in business for a very long time, and they're not in the business of taking your money because they lose their company. So, and I've got examples of those companies that I use down below too, if you want to use those, okay? Like One Gold or Vaulted. So, okay, JPMorgan sees gold prices much higher, right? Now, another thing, before I tell you this story, read the story to you, I want you to understand this. When the average consumer starts seeing stories that silver has hit an all-time high, gold has hit an all-time high, it causes them to turn their head. What? Why? And they start to ask questions, why? When stocks hit a 52-week high, that's when people FOMO in, right? He's like, oh my gosh, it hit a 52-week high. It must be there must be something going on. It's making that move, and they start to push in. Well, this emotional reaction into gold and silver, I believe, will be amazing when it happens. When exactly, I don't know. JPMorgan's telling you it's going to happen between 12 and 18 months, okay? So here you go. Check out the story. It says, this is out of Kitco. Growing expectations that the Federal Reserve is close to ending its latest tightening cycle, and the threat of an impending recession will continue to support gold and silver prices, according to the latest comments from JPMorgan Chase. Now, let me stop there. Last time this happened, as the Fed was raising rates in 2004 to early 2006, gold was treading higher, but it wasn't doing what you thought. When they started to actually lower rates, they started to sell off gold and silver started to sell off nominally, right? This time is different. We are pushing really strong levels, price levels in gold and silver right now as rates are parabolically going up. Why? This time is different because the average investor in gold and silver understand that, first off, it's parabolic rise in interest rates, and the money supply has been doubled, all right? So gold right now and silver are like racehorses sitting in a stall, and they're just like pushing around. That energy is pent up, and they are waiting for the day that they start to lower rate. Why? Because that day that the Fed lowers rates, and I've told you that it happens, it goes up, and then they like to plateau and get you into maximum pain and begging for them to lower rates, and then they become the savior when they lower rates, right? Gold and silver will explode because they know that money printing is coming. Stimulus is coming, more of that. Well, you saw gold and silver take off during COVID because money was expanding. All right, so the price of gold and silver built up. And anybody that bought gold and silver a couple of years ago are sitting back and just laughing. There's like, holy cow, like silver was literally 14 bucks or 15 bucks an ounce. It seems like yesterday. Now we're sitting at 24. So we're doing really good on a percentage basis. Amazing. Most people don't get that. So that's what's happening there. And that's what JPMorgan says they're seeing. It says in his latest research note, Greg Chenier executive director of Global Commodities Research, said that he expects the Federal Reserve to start cutting interest rates by the second quarter of 2024. Now, I will be honest, I believe that is actually correct. I believe between quarter 2 and quarter 3 of next year, we're going to see the Fed lower rates, unless we see a 20% dip in the stock market, okay, in that amount of time. That could happen, but I don't think so. And the reason why I don't think that's going to happen is because we have such strong inflation. And there's so many people piling every dime they got into stocks now. They went from savings accounts to money market accounts. Now money market accounts are shifting into stocks because people are searching for yield. They need to keep their money at or above the level of inflation right now, or they know they're losing it, okay? So he says that they're going to start cutting by the second quarter of 2024. And falling real U.S. yields will be a significant driver for gold. According to JPMorgan's mid-year forecast, analysts are looking for gold prices to average the second half of the year around $2,012 an ounce. Chenier said in his latest note that he sees gold prices averaging around $2,175 an ounce by the fourth quarter of 2024, with further upside risks if the U.S. economy does fall into a recession. Now, with that being said, $2,175 an ounce, when all the news outlets around the country are talking about financial news, and oh yeah, gold hit another all-time high. Oh, gold hit another all-time high. And it's just popping. That repetition in the consumer's ear, it hit it high, what's it called? All-time high. It starts to move people into looking into gold and buying gold. Shielded Prepper, Jesse, thank you so much for the super chat. It says here, Chenier noted that the deeper the recession is, the more aggressive the Fed will have to be cutting interest rates, which would be supportive of gold. He says, we're in a very prime place where we think gold ownership and long allocation to gold and silver is something that acts as both a late cycle diversifier and something that will perform as we look to the next sort of 12 to 18 months. The comments come ahead of the Federal Reserve's monetary policy decision. Markets see a 25 basis point hike is guaranteed. So this story is 2 days old, right? We already know that they've raised 25 basis points. And look, you've got one of the heads of commodities trading for JPMorgan saying, yeah, we see higher prices. What happened the next day? Smack down. So what do? I go and buy more gold. I go buy silver. Now, I love silver more than gold, quite frankly. And if you didn't hear it before, my broker, I called her, and we don't have to worry about a ton of calls coming in, honestly. JPMorgan, I told them your news. Why are you turning the lights off on me? Maybe it's the internet. I don't know. My point being is this. She said silver buffaloes right now because demand is so low, but there's actually stories right now coming out that U.S. demand is still hitting all-time highs, whereas the European demand for gold and silver has fallen off of a cliff. So Americans, ironically, are running into gold and silver, praise God, it's God's money, because they understand what's really happening in the greater economy. But my point being is, she said, oh yeah, silver buffaloes right now are $3.25 over spot for orders of $1,500 or more. And so I put her phone number down below if you want to call her and talk to her about that. But if you are doing smaller orders, I've got an affiliate link with a Silver Gold Bull. You don't have to use it at all, but it's down there. They're great, and they deliver small quantities and large quantities. But do your pricing, do your research, get the best deal possible. But these are the days to take advantage and look at the long term, like JPMorgan saying, look at the long term allocation. If you go long, we believe you're going to do well. These are the smartest guys in the room. All right, honestly, and I tend to listen to the smartest guys in the room, and that's why I've been successful. I just do what rich people do. Rich people, countries, they're buying gold, they're buying silver. The silver story is different because they don't want to cause a panic because there's so little silver out there that whenever there's a little bit of a rush to buy, the price explodes, the premiums explode. It just proves how little silver is on this earth. And the fact is everybody needs silver to build any bit of electronics, solar panels, water filters, any of that stuff. It's just absolutely mind-blowing. So I own about a 90% silver to gold allocation, honestly, guys. I believe that you're going to see silver someday be at astronomical levels. And I don't care who thinks I'm cuckoo bird. We'll see who's laughing. It's like when I talked about Bitcoin a long time ago and it's 40, $40, $100, then $500. Hey, last thing, Silver Symposiums, September 30th and October 1st. It's in Las Vegas. There's 100 seats left. I put a link down below, and right after this, I'll pin the comment. I believe that you are going to see an amazing awakening happening, and you're going to be around people just like yourself. So I figured Las Vegas was the easiest place to have a venue, so people can fly in direct all around the country, get in, get out. It's going to be at Caesar's Palace. We're going to have a lot of fun. Can't wait. Got some great speakers. Greg Manarino is going to be there. Joe Brown from Heresy Financial. We're gonna rock the house. I think David Morgan's going to be there. There's a lot of people. I'm blanking out now. You just got to go look at the website. Go check it out. And everybody that buys a ticket walks away with an ounce of silver. Guys, I hope you have a great day. The Economic Ninja is out.